Ladies and gentlemen, welcome to the midday market madness. Okay, this is madness. There are some names that are down, and they should be down. Okay, Shift 4 did not put up good guidance, so that company is under fire right now, and deservingly so. Maybe it's a little overblown right now. 16% down on the day is a little bit strong for the guidance that they put up, considering that they are holding strong on their midterm guidance of still being able to compound at 30+% rates. And mind you, they did end up putting up, I think it was 34% revenue growth. This company is actually cheaper than PayPal on a price to free cash flow basis. Today, it's cheaper than PayPal right now. PayPal after the sell-off. So there's some pretty interesting pricing that's happening. But could they be red? Yeah, I think that that's fair. Nubank being down 8.3%. I don't know if this is as fair. Obviously, the market determines what the market price is. And I'm not saying like, this is not fair, blah, blah, blah. Who can I sue? Something like this. I'm just going to hold out. And actually, I'm actually a very happy investor today because the companies that I ended up betting my chips on ended up putting up good results. The only one that's actually really seeing good performance in the stock is Chime. But Nubank and Nvidia ended up putting up great numbers that I was very, very happy to be shareholders of. And I think that eventually I'll be rewarded by those companies. So if we end up taking a look, there's a video I wanted to play by CNBC that I think encapsulates what, investors or analysts, I should say, thought of the earnings. There were analysts that literally said, I don't know what analysts or what investors actually wanted to see. This was far beyond anything that we could have ever have expected. And that they just don't know what the next catalyst is going to be, as if growing at 80% is not a catalyst. But let's go ahead and have a listen to this call, and we can jump in.
With reaction to Nvidia this morning, Christina Partsinevelos has that for us. Hey, KP.
Hi, Carl. Well, Nvidia just dropped $78 billion in its April revenue guide. That's $5 billion above the street. The widest beat on guidance in just 2 years per FactSet. And the bulls pretty much got everything they asked for. Blackwell ripping higher, network on fire. The calendar 2026 orders already in the bag. But look at the stock, almost 5% down, the worst outperformer right now, the most active name on the S&P 500. And this move down comes down to a few things. First, CapEx fatigue, which we've talked about for quite some time. It's plagued the stock for quite some time. Some of that upside, too, is from networking rather than high margin compute. And then there's been no new number around that $500 billion data center sales figure the market was waiting on. Yes, they said it was going to exceed that, but they didn't actually change a number. Worth noting, not a single participant in a Jefferies investor survey thought Nvidia would guide above $77 billion. They did, and the stock is fading anyway. Morgan Stanley called it almost a math problem. At a $5 trillion market cap, the stock may now be a referendum on broader AI transformation, where a scientific breakthrough does more for the name than another blowout quarter. Bernstein was more straightforward. Quote, "We aren't sure what else investors want to hear, but we like what we heard." Even one of the few holds on Wall Street, Deutsche Bank, acknowledged valuation is definitely getting attractive. They just can't find the catalyst to break it out. The consensus now points to GTC, a big tech conference in mid-March, March 16th, as the next real moment for the stock. And Mizuho's take is worth keeping in mind. If this stock starts moving a lot today, which it is, a lot of money rotates out fast or in. And right now we're seeing it rotate out, guys.
So, Christina, is your view then that, from the analyst community, it's maybe more the reaction in the stock price today is more based on valuation, which doesn't seem as stretched as we may have seen it historically, or were there actual aspects of the numbers that they think the market is moving on?
So to your point about valuation, estimates are coming up, right? So valuation is actually going to drop. It's just a question to the retail crowd. How low or how cheap does this Nvidia the most important name in the AI infrastructure build, and how low does it have to go? In regards to today too, there was one comment saying that many hedge funds are using Nvidia to short and actually pay for the memory trade, which is why in the opposite direction you're seeing so many of these memory names trade higher. People are just looking for alpha in the market. The next big catalyst specifically for Nvidia, usually there's at least a 6% options move post GTC March 16th, and we're expecting Jensen Huang to maybe have a lower latency chip because of that Grok acquisition. That's one. There's always some more moves about the OpenAI funding deal, which should close, and then frontier models that are going to be trained on Blackwell. We still haven't got those yet. So those are three other catalysts, perhaps, that will move this name. And so right now, this is a strong report, excellent report, I should say, but it's becoming a sell the news kind of event.
Yeah, it seems like that's been the case.
And by the way, like she said, I think she summed it up well. There wasn't a single analyst, any form of consensus that had guide going above 77 billion. At the highest end, it was 77 billion. They put up 78 billion and did not include China sales. But we've seen this from certain companies at specific times, where sometimes people like using this as almost like exit liquidity and want to potentially rotate out of Nvidia to take advantage of memory names, which might have potentially more upside, that they believe they're on a similar trajectory of a build out, but yet potentially way lower on an actual market cap basis. But the upside could also be quite great. But it is being disrespected. This is by far the most disrespected name in the Mag 7. They're actually the second cheapest name, just behind Meta, only by 1 times on a forward PE basis. Now having a forward PE, and this is if guidance is correct, which, mind you, has been adjusted higher and higher and higher, of 22 times right now. Let's go ahead and see that with our own eyes. Okay, where is it? If we guide forward, yeah, see, look at this. It's not even true. This actually might be the cheapest name in the Mag 7, because right now, for April, which is the next quarter, they have total estimates coming in at 75, nearly $76 billion. But we know that's not the case. We actually could probably assume much closer to about $80 billion, which would bring it obviously much higher than where we are today. So we need a couple more analyst estimates to adjust for that. It's not going to be 75 billion. That's way, way too low for what Nvidia is guiding for and always beats. But even that, even if we're to take those, suppressed numbers, I need to include this in my Nvidia video that I upload this weekend. But forward PE of 22 times. Sorry, the chat is a little bit in the way and the text is a little small, so I apologize. But let's go ahead and go quarterly. And let's drag this right to the front. The cheapest names are Meta at, what is that? 21.5 times. And then just above that is Nvidia at 22 times. And the estimate is not even correct yet. This actually, I think, if you were to add in the additional almost $4 extra billion into their Q1, that's just Q1, not even the rest of the year, which is probably not even adjusted yet. If that's the case, this is probably the cheapest name in the Mag 7 right now on a price to forward basis. So I remain extremely happy. Like I can wait. That's what I do have on my side. As investors, we have patience, and essentially that's what Warren Buffett and a lot of legendary investors have taught us, that the stock market is a game of giving money from the impatient to the patient. So am I excited about the way that the stock moved? No. But if I have to wait a little longer, an extra couple quarters to end up showing off that additional growth, it's only going to get cheaper from here. Do I think that Nvidia can get to a forward PE of 10 times? No. I think at some point it gets just a little too cheap. I saw Chris Patel. I love Chris Patel. Him trying to explain away why this is not moving is such cope. It's insane how bad of a take I think that he had. He said that growth was moderating. Growth is re-accelerating. This is the same guy. And by the way, I love Chris Patel. I'm not going after him. I'm just going after his take here. This is the same guy that on my podcast probably about 12 months ago said that in 2025, CapEx is probably going to slow to like the 20% growth rates, if not even lower than that. Now they're putting up 70+% growth rates. Nvidia is reaccelerating growth. He was just straight out wrong. Okay. On the price of the actual stock, we'll see. But that's not what I'm betting on. I'm betting on the actual fundamentals. And, I'd probably do better on prediction markets, just assuming whether or not Nvidia is going to beat on earnings. I'd probably make more money than trying to bet on the stock. Yeah, I was laughing. Yeah, it's moderating. What's moderating about it? Like, if a company has a significant pop to 250%, that's not where they get anchored to. Their growth is way, way higher than it's ever been. You don't just anchor to the highest point. That was an anomaly. The 250% was the anomaly, not the 60+% growth, the 50+% growth that we're reaccelerating from. A largely bad take from him, but that doesn't mean that I don't respect. He's a legendary investor and like truly a young Bill Ackman, but he can be wrong, and I don't think that people need to have a take on every move that the stock market has. Sometimes the market just acts irrationally. You literally saw it from every analyst going, I don't know what investors would like to see more. Like, we've been covering this company. We'll we can't imagine anything getting better than what it is right now. Nubank, though, we should talk about as well. So can I bring up Nubank's? I'm saying it like I have some sort of Jarvis system. Bring up, I'm just talking to my own hand, bringing up the spreadsheet. But if I go to their earnings presentation, everything that you'd want to see from Nubank is exactly what's happening. This is such an amazing business. They're down roughly 9%. It's crazy to me that a company like this goes down, but it's very much in that SoFi vein of companies, right? So more customers now at 131 million, an activity rate across all geographies of 83%. Average revenue per customer now broke a new record, $15 per customer. The revenue, look at Q4 revenue each year. 600 million, 1.4 billion, 2.4 billion, 3.1 billion, 4.8 billion US dollars. What? Okay. Gross profit also ended up accelerating quite strongly. The efficiency ratio of the company is now probably the lowest I've ever seen a financial institution ever have, 20%. And in fact, they said that it'll slightly turn up back to about 21% over the next year as they go back into the office. Right now, everyone is working remotely. But they want to go back into the office to try to, get some more efficiencies around people working together and build ideas. But just like every other company that we follow in the fintech space, more products equal more lines of revenue. They continue to pour out more and more touch points of their business, and people are attracting to those services. So that's exactly what ended up happening. The efficiency ratio in Brazil, 86% activity rate now. They're the number one private financial institution with 113 million customers. They're growing in Mexico. Colombia's doing great. They're seeing new verticals like NewCell, which is their SIM card, grow. Travel customers are growing 3x year over year. They got a conditional approval for a national bank charter in the United States, which is the top license. That's the same one that SoFi or JP Morgan has. So yeah, they're doing it. They want to get AI and customer experience. And I think that was actually one of the things that brought the stock down is, unlike saying that their company was impervious to artificial intelligence, David Velez was extremely honest. And he said, this is the biggest risk that the company has ever faced. He said that AI is like this is an extinction level event for their business. And so they want to make sure that it's their top priority. But I think every company should be saying things like this. That's the way that Google should talk. That's the way that Nubank should talk. That's the way that SoFi should talk, because there's so much advancement that you want to make sure that you're not ignoring it or brushing off the idea of risk. So they are full force focused on artificial intelligence. While they do that, though, they continue to tighten their entire business. The loan portfolio continues to grow across all geographies in all different sectors. Now, this used to just be a credit card business. Then they got into personal loans, which is on the unsecured side. And now they're getting into secured lending as well, payroll lending, stuff like this, where the payments of those loans immediately come out of people's paychecks. They don't even have to worry. Like the default is unbelievably low. Deposits are growing across every single geography, even on a foreign exchange neutral basis, quarter over quarter, up 12%. That's crazy. Cost of their interbank rate, which is essentially how much they're paying out versus like what the Fed funds rate is across Brazil, Mexico, and Colombia, is also falling. This hit a recent high of 91%, but that's also falling, which means they're saving money. Okay. The company is just getting better over time. Non-performing loans as a percentage of their overall business is falling. The amount of coverage ratio that they have for NPLs over 90% is 230%. Like, normal businesses have like what, 30%? Like it's crazy. Gross profit continues to climb. This is a phenomenal business. One of the best I've ever laid eyes on. I mean, whenever I learned about Nubank, this was a long time ago. You guys can go see the first video I put out on Nubank. I think was January of 2023. The stock was like $3 and something. The first buy I did was $3.81. Okay. This will be, with all my heart, I believe this, a 10x from my initial investment. Now, my average cost is in the $6 ranges because I just kept adding all the way up. I've purchased in the double digits as well. I haven't purchased recently. But whenever we end up seeing a sell-off like this on great earnings, everything is going in the right direction. They're expanding potentially into the United States. They have aspects to get in or aspirations to get into Argentina. All of these have massive total addressable market expansion for them. Their loans are getting better. They're expanding their portfolios. This is a SoFi on steroids. And how did I feel whenever SoFi ended up selling off? I don't think it's right, but hey, that's the name of the game. Nubank sells off a little bit. That's all right. It'll come back. I'm here for the 10x. This is the transfer of wealth from the impatient to the patient. Imagine today, right? Like we think back to whenever this company in Q4 2021 put up $600 million. Oh, also, we didn't even talk. Why didn't I even show that slide? The best slide in the whole company. It was the next slide. Dang. Let me just bring this back up really quick. Net income. This is on quarterly basis. So, like, they went from $557 million to $637, $882, nearly $900 million on a net income basis, up 50% year over year on a foreign exchange neutral basis. That's how much their company is growing by. Okay. On a return on equity, 33%. This is breaking records. On an adjusted net income basis, we're now at 35%, $942.8 million of adjusted net income. Like, I am so happy to hold this company. And I honestly, my sleep score will probably go up like this company could get cut in half. And David Velez is the CEO of this company still, one of the greatest capital allocators of all time, greatest managers. This company is in great, great hands. Anyway, how do we give up on a company growing 30% and buying back stock? We don't. We don't give up on those companies. This new company is good. Well, it's a top 5 company in the portfolio for me. And yeah, but it will be. So Nick says Nubank should be at 25 plus right now. I definitely could see it above the 20s. Their growth, their revenue CAGR over the last 3 years, this is at being a bank, is 56%. Diluted EPS over the last 3 years, 95.7%. That's a CAGR. So if we go back, yeah, NU is the ticker, yeah. They're a Latin American bank. They do gap statistics. So in Latin America, they don't even have to show off their numbers. It's not required by law for them to show off their statistics on a quarterly basis. They only have to do it every 6 months. But what's it called? Nubank wants those American customers, so they actually report in US GAAP standards. They don't have to do that. They're not regulated to do it. But in fact, people ended up worrying, like whenever I was getting into this company originally, people were getting really scared because they go, hey, well, Brazil's not the same as America. Like maybe they're fudging their numbers, maybe stuff like this. That is no longer going to come into question at all whenever they have a US national chartered license. They'll be regulated by the Federal Reserve, the OCC, the SEC. So you can guarantee that the numbers that they put up are absolutely legit. They'd be held to the highest standard in not even US market standards, but worldwide. That is the highest standard. And then on top of that, they're the fastest growing, the largest neobank outside of China, continues to grow. 62% of all of Brazil uses them. They're a pretty interesting name. Anywho, I forget what I was going to say about that. Oh, also, they're not just a consumer bank. They're a small business and big business banking platform as well, which is also showing off great statistics. And in fact, they just recently had a CFO change. So the way that they report their numbers now is much, much better. I liked it before too, but it's even nicer now. And they show off all of their numbers. So one of the things that I used to do that help people is I'd show off my charts. Like I'd have to manually plug all of that information, and just so then people could end up seeing, companies like SoFi, like all of their numbers, rather than just looking at quarter over quarter or year over year. But Nubank realizes like, hey, this is actually super useful. Let's just be transparent going all the way back. So for all of their numbers, going back to Q1 of 2021 to, their most recent fourth quarter 2025, you have all these numbers. You can download the presentation. It's completely free on their earnings results. I think that this should be a company standard. So they do this for everything, for their operating figures, for MPLs, for foreign exchange rates, for income statements and balance sheets and free cash flow, or not free cash flow, but just cash flow statements, everything. Okay. Which just allows you to fully understand the business. They want to be as transparent as possible. As transparent as possible. They're way better than, 95%, 99% of American businesses in terms of showing off their numbers, because they understand that there's a concern with Brazilian businesses. What do you think about Shift 4 earnings? Disappointing. The guidance was disappointing. And if you're going to hold up 30+% growths, then you need to show off better growth than volumes only growing at 15 to 25% was their guide. Now, maybe this is a beat and raise strategy, but it's not a good sign. I don't like it. And honestly, what I realize is that whenever I'm looking at Shift 4, I constantly am going back to, okay, well, let's look at the numbers that Nvidia just put up. I've been fully focused on a lot of these technologies in terms of either stable coins and tokenization to agentic AI, generative AI, cloud ended up growing, and these are so much more exciting prospects for me. It's always been a better bet for me to purchase names that are at the frontier, growing, innovative companies than it is for me to try to find value or even deep value names. I've never succeeded that way. Even PayPal today. And now I'm not involved with PayPal, but they're down nearly 6% now because the talks with Stripe ended up, Stripe had to come out and say, hey, we're not in talks with PayPal. We don't want to acquire them. So this big run up so there was acquisition talk, and then this run up was they're in talks with Stripe, and then this morning was Stripe coming out and saying, we're not talking with PayPal. We don't care about PayPal. So buying these deep value names is a hard game to play. You know, what's easier for me is buying companies that, like, okay, you don't want to believe in Nubank today? That's fine. I'll wait a year. They'll grow out of it. They can grow out of their problems. But if you don't see PayPal end up getting an acquisition or something like this, what do you end up? You wait for their competition to get stronger, potentially more players that end up coming to disrupt them further, market share losses, which is what they're which is what's happening to them. And so the case for them becomes worse over time. And so you need to get your timing right. And I don't know if you guys know me or not, but my timing is not a strong suit. My timing is hopefully picking names that compound and are some of the greatest companies over the next 10 years. That's my goal. I think Nubank is going to be that. I think Nvidia is that. I think SoFi is that. I think Robinhood's that. Like, you know, I think Shopify is that. I think those companies are so easy to pick. A 10x on Nubank from my initial purchase would be $38. $38 a share. But I'm not calling for that this year. I'm saying, like, that's like a 5-10 year out goal. As long as I can pick a company that's going to, like essentially the S&P 500 wants to 2x every 7 years. That's sort of like the easy math. Can I find a company that does a lot more than that? And if I do, does that pay for my mistakes whenever I pick other companies that get it wrong? Nubank has greatly paid for that already. And I think that they're only going to continue to advance going forward. Like I just showed with all their growth, increasing margins, a total addressable market that is bigger than almost any other space. Financial services is huge. Yeah, it's amazing. You should look into Bloom Energy. I have a little bit. It's just a matter of I think it's fine. I just don't know the space, and I don't. What scares me is the energy efficiency of GPUs coming forward. Like, what if there's some breakthrough in chip technology where you just don't need as much energy, and the token outputs are way, way, way better? We've already seen that with, you know, the temperatures that it takes to cool the Vera Rubin platform versus the Blackwell platform. I think ended up saving something like, I forget what the exact amount is, but it was something like 20% or something. Does that still mean that there's more growth for Bloom? Absolutely. Like, I'm not, but I just, if it goes in the too hard for me bucket, just for my own personal beliefs. We will still be in yeah, I just said that. I still think that'll have opportunities for Bloom. It's just, it goes in the too hard for me bucket. I like buying in the sectors that I know. But I think Bloom will do good. It's just like the HIMS thing. It's like everyone was like, Tanner, how are you not looking at the triple digit growth rates? And like, so clearly there's a business here. And then I was like, yeah, but I don't know what I don't know in this space. And then everyone's like, you're an idiot. This company's growing like crazy. Andrew Dunham to the freaking win. And then I think I was completely vindicated. That, you know, I'm sure it felt good running it up, but on the way down, what a massive firebomb that this company has been under. and I wouldn't have seen it coming because I don't know that space. That goes in the too hard for me bucket. And every retail investor gets in these modes where they like pick a name and they're like, Tanner, how could you possibly not see Bloom Energy? I'm like, dude, I understand the bull case. I just don't know what I don't know, and I don't have to play it. Okay. Agreed, Tanner. I knew Himothy was not it. Well, I didn't even know that. Like, I think it like I didn't wish it would go down. I wish everyone would do well in it. I just didn't know. Yeah. I just bought Broadcom, AMD, Google, Nvidia, Tesla, and Amazon. I mean, this is my kind of guy. Yeah, bet on big tech. New as a washing machine, Tanner. Okay. Approved for a national banking charter of the United States. But whatever you say. Let's go ahead and take a look at Chime, which is one of the companies that we did have in the portfolio, still do. I'm only going to hold it for one more quarter unless they end up showing me that like they really freaking deserve, they really deserve to be a long-term position. But right now it's a trade. And sometimes whenever companies that you put in your investment strategy end up doing really well, people sell them very quickly and they turn their investments into trades. And sometimes whenever people have trades and they don't do as well as you'd want them to, people turn them into investments and hold too long. Okay. I don't want to turn my trades into investments until I really see that like the case has changed for Chime. I ended up purchasing this company in the 1650 range, like practically bottom tick the company. And my hope is that it was going to be somewhere around $35 a share, which is roughly around where it IPO'd at practically. Now, I think there's just a broader fintech sell-off and everything like this, so we're not really seeing that upside. But they did put up decent growth. I didn't like their guide as much as the market did. Like, this is why I find it so funny. Like, Chime is getting some sort of appreciation here, and Nubank's not yet. I actually like Nubank's commentary more than I like Chime's, but people are getting excited about their product cadence and their ability to grow much quicker now that they're not working with Galileo. Let's go ahead and have a listen to the CEO talk about their performance.
Shares rising on an upbeat outlook. The company says demand for its digital banking products remaining strong. Joining us right now is Chris Britt. He is Chime's co-founder and CEO. Good morning to you. It was a strong quarter. Tell us what's going on here.
Great to see you, Andrew. Thank you so much for having me. Yeah, we're so excited. The team really executed this quarter and really this year. This is our first report as a public company, wrapping up our full year results. And we just had an outstanding year. We added 1.5 million new active members, taking us to about 9.5 million actives. We launched a range of new consumer products that drove our growth. We made critical infrastructure investments in terms of launching our new Chime Core. So we operate our full stack in-house now. And we also entered new lines of business like our enterprise business, where we sell Chime products through the employer channel. And overall, we wrapped up the year with $2.2 billion of revenue, growing 31% year over year. And in Q4, we got to a 10% EBITDA margin. So great growth balanced with operating discipline as well. So we're feeling really good about our position going into 2026.
Who do you see, just for those in the audience who may not be totally familiar with you or understand it well enough, who do you see as your competition right now?
Our key competitors continues to be the traditional banks. We are in the primary account business. We open up relationships with consumers who are seeking bank accounts that are actually helpful and easy and affordable. So we partner with community banks. When a consumer signs up for a Chime account, it's a tri-party agreement between the consumer, Chime, and the bank. The money resides in these FDIC insured accounts, and we build the brand and the experience and answer the calls and deal with the disputes and run all aspects of the operations. But it's working incredibly well. In fact, J.D. Power announced just at the end of last year, they did a survey of new bank account openings in the U.S., and they found that 13% of all new checking account openings were through Chime. The number 2 player was Chase, and we were about 40% higher than them. So we are far and away leading and expanding our market share of primary account relationships in the United States.
Chris, we can't have a conversation without saying the words AI at some point in the interview. How is that changing things as you see it? And when do we get to a point where you're involved in agentic transactions?
Yeah, it's a great question. And obviously a lot of the swirl in the markets these days have to do with that, particularly as it relates to SaaS companies that have workflows that may be improved or automated through agents. Look, we see AI as a superpower for our company. If you look over the past 3 years, we've decreased our cost to serve by 30% and increased our revenue per customer or average revenue per active member by about almost 25%. And so we're putting AI to work in terms of all aspects of our operations, not just decreasing costs, but actually improving customer service levels and outcomes. And as we look into Q2, we announced on the call that we'll be launching the next generation of our AI co-pilot called Jade. If you think about, there's so many consumers in America, about 50%, that lack really any basic amount of financial education. And we think that we can really play a critical role in helping our members make smarter decisions, not just get smarter and have knowledge about what to do, but to actually take action to make sure you're paying high interest credit card bills off, to make sure that you're getting into a healthy rhythm of saving and investing and so forth. And we think we can uniquely play a role for our members because of this primary account relationship that we enjoy.
What about the Chime card, the credit card business? Where do you see yourself in that now? Where do you see this going?
Well, last year we launched Chime Card, which is a secured credit card that has rewards. You think about the rewards landscape, most people are thinking about the Amexes and the Chase Sapphires and these cards that cost many hundreds of dollars a year and are generally for prime and super prime consumers. If you think about basic banking and debit cards, sort of your everyday transactions that regular, mainstream America uses, there aren't very good rewards on those types of products. So we launched Chime Card, which gives 1.5% cash back on everyday transactions in some of your most essential categories. And we also announced on the call that in Q2, we'll be launching an elevated level of Chime Card, a premier subscription level that will give people even greater rewards, greater APY on their savings. And we're really excited about the opportunity to serve, even higher income consumers better with this product.
Right.
We think it's going to be the best bank account product in the US.
Let me ask you a different question. You were one of the first companies, I think, to come out publicly and support the Trump accounts for your employees.
I don't care that much. It's not going to make a difference to the stock. They did come out and say that they want to add roughly 1.4 million active accounts next year. That would be quite high. If they can end up doing that and beating on earnings, that would also be quite interesting. But I did see some comments in the chat about the stock recovering a little bit, not just Chime, sorry, but the broader markets. We are seeing a little bit of a tick up. However, long way to go before we break the sort of pricing that we opened the market up at. We're at 607 on the triple Qs. The SPY, let's have a look here, also down 0.85%. Little bit of recovery. Let's see if some of that is from Nvidia. Not at all. That's other names that are bringing up the markets. Nvidia still down 5%. I need to write an actual thing to show what, an honest guidance for 2020, calendar year 2026, their fiscal 2027, would make their price to earnings look like on a forward basis. Because it would be freaking insane how cheap this company would look. Probably on the verge of being under 20 times forward PE. If they're at a 19 times forward PE, what is that even? What's the PE of even a tobacco company? Altria Group right now. Let me just go ahead and see this. Altria PE. Oh no, it's not okay. I'm a little out of my depth here. They're a little bit lower. They're at more, I think, 12 times, 13 times, something like this. But still, I don't know if Altria Group and Nvidia are supposed to be even in the same, 10 points of forward PE at all. Yeah, they're at 12.5, and honestly, Nvidia is probably getting closer to 19 right now. It's because of the Burry post. All right, yeah, no, he's been right so far. Dude has called the sky is falling 100 times now. Everyone actually believes him this time. The boy cries recession. Wolf recession. All right. But now everyone is going like, you know what? He's right. That's all right. I will outpatient him. The market's up 70% since he said sell it all in 2023. Yeah. Wix is up today. So I'm not holding any Duolingo or Wix or any of these names right now. I don't even know if I want to buy like Wix here. I'm not sure. $70 stock on Wix. What was the story that came out for Wix? They didn't show off earnings yet. What could it be? I know that Base 44 has continued to update like every single day. There's a new function on Base 44, which is pretty crazy. Wix launches AI integration with Google. Also has a $2 billion AI integration with Google. That's what it is. Seems like, right? Let's see. They've got a fireside chat, or there was a fireside chat yesterday. And the day before that, they did integration with Google Search, Google Maps, and Google AI mode to turn queries into instant bookings. Jeez. That's pretty cool. That actually is pretty cool. That could drive real growth here. So you could get instant appointments, and then it would tie in with, let's say, Glow Studio here that has a Wix account. That's pretty cool. WIX, not not the VIX. The VIX does not have an integration with Google. That's funny. Wix.com. I guess the biggest question for Nvidia is, what do they do after the build out is done? How do they keep growing after that? Well, I think it goes into sort of a maintenance mode, meaning that there is a depreciation of chips. Burry seems to think it's much sooner than a lot of these companies are giving it credit for. But let's imagine it is sooner. Then that means that you would have to continuously buy, Nvidia's newest chip, right? Because the old ones end up essentially running themselves to death, and then you end up buying the next chip. The same way, whenever your computer dies or your phone dies or something like this, you buy the newest model. The growth would slow down to a crawl, but it would be a consistent level of that revenue, depending on the build out. That's the assumption. Okay. Nvidia's networking is ramping. Absolutely. Yeah, FSD, robotics, but I would consider that all part of the build out as well. I think the part is that I think people are getting wrong is just how big is this build out? Or at least where we differ. Not that they're getting it wrong. Maybe they're right, but where we differ is how big is the build out? Is it over in 12 months? Is it over in 48 months? I mean, the size of how big Nvidia might get during those two periods is going to be a lot different. And that, I think, is the real question. Very hard to answer. Still running my 4-year-old GPU, still works perfect. Yeah. We're not talking about your GPUs, though. and 4 years, honestly, will be fine. 6 years is going to be fine. But still, there are 6-year GPUs out there that need replacing. You know, and then they end up buying the new GPUs. So it's not about replacing every single year. It's like, we're not replacing the old iPhones. The iPhone 17s are not getting sales mostly from people that have iPhone 16s. They're replacing it with sales from people that have the 12s, 13s, 14s maybe. And then those people are upgrading. So there's like a constant, like almost leapfrogging event of the 6-year-old chips end up becoming the ones that end up getting replaced with the new chips. That's the maintenance mode that people are talking about. What's your timeline for HIMS? I don't have HIMS. I don't have HIMS. I don't have any health. The closest name to a healthcare company that I have is Nvidia. Because I think like we're going to try to cure some pretty cool diseases, and that might be an interesting part of their business. Look at this. This is a pretty cool slide that Fiscal AI ended up showing off, was their new investments that they ended up making this year. 59% of their free cash flow ended up going into buying businesses. Now, these are all ones that we knew about, like press releases, everything like this. But this, instead of just going in and buying like buybacks and buying back their own stock, what they really want to do is make sure that the ecosystem is insanely strong. And once again, Chris Patel ended up saying that this was bad news or something like this. It's so far from the truth. They would rather put $2 billion into CoreWeave to have them come back and buy $250 billion of NVIDIA chips, which is what the deal was. And then they also get CoreWeave shares at $89. So they have a venture arm and commitments of future capital to buy back chips. And then they get their cash back in return, but keep the common shares. It's a great business for them. So yeah. It's pretty interesting. The volume on Nvidia is insane. Maybe it's good for Hood and them. But yeah, that is crazy. Millions and millions of shares every minute. Or I'd say maybe 500,000 shares every minute. Still, it's a lot. Did he sell Tevis? He was the biggest bull. Yeah, he doesn't hold HIMS. Tevis sold all of his HIMS. He's fully out. I think he bought Nebius with his proceeds. Okay. Let's go see. Jensen Huang ended up speaking. Let's have a listen to what Jensen Huang told Becky Quick. Let's hear here.
Nvidia reporting better than expected fourth quarter results after the bell, driven by revenue growth of 75% in its core data center business. Nvidia dominates some 95% of the data center market, but it has a price to earnings ratio that is consistently below other chip companies. I spoke to CEO Jensen Huang after the quarterly release and asked him if he was concerned about how the street values Nvidia.
I think part of it is just imagination of how large a company can be, and imagination of how large this computing industry can be. I would say, starting from the punchline, the market can't hold us back forever, and the reason for that is because we're going to keep on growing. And the reason why we're going to keep on growing is because software has fundamentally changed. The way software was done in the past, in these classical computers, the amount of computation necessary was not very high. But because AI is contextually aware, meaning every single time you use AI, it's generating the tokens, it's generating the response to you, generating the answer to you for the very first time. And so it has to compute and has to do artificial intelligence. The amount of computation necessary for the future of software is enormous. And so people are kind of wondering, is this $700 billion in the top 5 CSPs? Is that sustainable? And I'll just tell you, absolutely. This is the way computing will be done in the future. Every single query, every single way we interact, every time we interact with the computer, artificial intelligence will be involved, and the amount of tokens that will be generated will continue to grow. And so I think the sustainability question, people have to understand from first principles what's happening to the software. We understand it better than most, and they have to understand what's the direction of AI. The other thing is, will AI, that people have questions about, will AI ever be useful?
Right.
And of course, when ChatGPT came out, everybody was inspired by that. And then it was hallucinating too much. And then all of a sudden reasoning came out and people were inspired by that. And all of a sudden computing demand continued to shoot up. And then now the question is, will AI ever be useful for enterprise? And here we are at a new inflection point with AI now agents being used in enterprises all over the world. The demand for these agent AIs are now skyrocketing, and the revenues are skyrocketing.
Sure.
And so I think these are things that people will understand, and they won't be able to hold back the stock much longer.
The one question, though, is people look at your competitors. Let's say an AMD who just signed this deal with Meta earlier this week, and they think, okay, maybe some of these other companies could make some inroads into market share at some point. Again, you guys are 90 to 95% of the market as it is right now. You are the 800-pound gorilla, but do you worry about losing market share to any of those chip companies?
Well, this is the largest computing industry the world's ever seen, the largest opportunity that the world's ever seen. And so it's understandable that we have a lot of competition. But obviously our position in the marketplace is because it's really, really hard to do what we do. And the pace that we do it, the scale at which we do it, has never been seen before. Our R&D budget is already $20 billion, growing and focused on just one thing and one thing only. Of course, other people are building chips here and there, but Nvidia is building the entire AI infrastructure. And these AI infrastructures, the AI factories, are incredibly hard to build. The technology is complicated, the software stack is complicated, and the pace at which we're doing it is incredible. And so, no matter how you look at it, Nvidia's leadership is pulling ahead every single day. And the type of deals that people are doing kind of tells you how hard it is, the work that we do. And then the last thought that I'll share is, because AI requires compute, and because AI is now tokenized and tokens have revenues associated with it, compute is a company's revenues now. I call it an AI factory for a good reason, because a company's factory is the source of its revenues. It's the source of its growth. And so the choice of the architecture is vitally important because it directly affects your revenues. It directly affects your company's growth. And so if you look at our architecture, our performance per dollar, our tokens per dollar, our tokens per watt, per amount of energy used, is completely off the charts, better than anybody else's in the world. And when the world is power limited, and when your factory is power limited, then our architecture translates to the highest revenues for our customers. And revenue growth matters.
We mentioned Anthropic before, and the Secretary of Defense, Pete Hegseth, has given Anthropic until Friday to give the Defense Department more access to Claude, or he says they could actually risk invoking the Defense Production Act, or maybe even labeling the company a supply chain risk. You're a strategic partner of Anthropic's. Do you see anything wrong with what the Defense Department is doing?
Well, the Defense Department has the right to use the technology and use the products that they procure in the way that serves their needs. And obviously their needs are, it's the Department of War. In the case of Anthropic, of course, they have the right to decide how they would like to market their products and what kind of use cases it could be used for. And so I think they both have their reasonable perspective, and however it gets worked out, this won't be the Anthropic is not the only AI company in the world, and of course, United States is not the only customer for any company in the world, and so I think they both have their proper positions. I hope that they can work it out, but if it doesn't get worked out, it's also not the end of the world.
Again, that was Jensen Huang talking about
I do always think that it's weird whenever they're like, Nvidia has 95% market share of the data center space. What do you think about this one customer that's going through this one specific issue with their one customer? It's like, Jensen doesn't care at all. Like, what do you think about AMD? We don't. we're not thinking about it at all. You know what they're thinking about? And I ended up posting this on X because I just thought it was funny. There was a report from the information that said Google and other big tech companies could borrow hundreds of billions of dollars each. This might be what they're planning on doing. I said, I wonder what they're buying. They might be getting interested in something. Nvidia's down 5%. All right, cool. Up is down, down is up. I will remain patient and wait this out. Looking to buy, however, can I take advantage of these pricing? Now, if I was a new investor or didn't have shares of Nvidia, I would be looking to potentially look for entry prices here. But this is such a massive percentage of my portfolio, and I don't want to just keep barreling in on the same name because I have a rule that I don't want to let any individual company be over 50% of my portfolio, and this is like 47% right now. So that means that I need to potentially buy some other names. Maybe CoreWeave, maybe Nebius. Maybe after CoreWeave's earnings tonight, which we'll be live for, Jose and Neil will also be there. I don't think we're doing it with Amit just because Amit's not going to listen to the call. But Jose, myself, and Neil will be live to listen specifically to the CoreWeave call. If that ends up falling, I could see myself getting entry in that name. More Nebius, these sort of companies. These are annual recurring revenue type businesses that will still benefit from the big build out. They're going to have insane capital expenditures, but there's potential where, Dan Ives said there's a buyout potential for a name like Nebius or something like this. Great, go for it. I mean, you're going to have to pay a premium for a company growing at 500%. So we're seeing updates from Toloka, and Nebius ended up just doing a new deal together, which is a subsidiary of Nebius, where their new Tandem service, which is essentially AI or real humans that are coming in to help artificial intelligence. So essentially humans for hire will be monitoring and orchestrating AI agents. That is now built directly into Nebius. So if customers of Nebius want to hire human help to say, hey, can you overlook these things to make sure that the prompt that I actually put in is the thing that I actually get out? Which talk about new job opportunities. Like that's going to be a new job that we just didn't foresee happening. And now we have Tandem by Toloka. All of that is owned by Nebius. So there's just going to be more and more growth. ClickHouse continues. They think there's going to be another round this year in 2026, which ends up bringing up the valuation. Potentially, we could see a north of $20+ billion valuation on that company. If Nebius has 25% of that company, that could be $5 billion. That's, almost the same overall size of Nebius today. So yeah. Okay. Let's see what else. Buying the Melly dip? No. I like Mercado Libre. It's in my almost like forever hold position of my portfolio. But everything I buy is going to be aggressively in artificial intelligence. And I'm honestly thinking about trimming more names than I ever have and just going like at some point in your life, you have to stake like the flag in the ground and say, no, I've done the due diligence. I believe in what I believe, and half the bets that I'm making are not worth what this is worth. Like, there is severe upside in artificial intelligence, and people can say that they know, or they're clowning or trolling on me saying that Nvidia is overvalued. I mean, read an investment book, my friend. This is a cheap business. I'm looking to double down on these types of names. CoreWeave, Nebius. I could full port CoreWeave, Nebius, and Nvidia. I won't, because there's no risk management there. But I have to double down on what I believe on names like in years like 2026. So you're thinking of selling Melly. Dude, I've thought about all potential cases. I've thought about selling freaking like SoFi and all these names, just being like, you know what? Why do I even have brokerages and banks? Like, is 30% a growth rate that I even care about whenever AI is growing at like so much faster than this? But then I need to put on my clear head and realize that there's no risk management there. So I don't know what I'm going to sell. Do I want to hold on to Shift 4, which I think is a good name, but it's getting into deep value territory, and I don't want to wait for acquisitions. But yeah, if USA attacks Iran, VG is a winner. Yeah, I mean, there's potential other investments. There's one that I think sort of fits into all macros, and that's AI. Yeah. And I don't even think it gets regulated away, which is crazy, because the worry is that China is going to move faster than the US. And so they don't want to potentially fiddle around with that. Okay. Let's go ahead and see another interview with Jensen Huang really quick, where he said that the market got it wrong on AI being a threat to software companies. Let's have a listen.
Nvidia issuing an upbeat sales forecast, raising its revenue guidance for the current quarter by about $5 billion above what the street was expecting. That's all coming on strong AI demand. But CEO Jensen Huang says that the markets have miscalculated the AI threat to software companies. I spoke with Huang after his quarterly conference call about the rise of AI functionality across industries and the SaaS apocalypse, that those fears that have spooked investors.
I think there's a deep misunderstanding. What Claude is definitely revolutionary, and it's an inflection point for AI. It's the first time that AI can perceive, it can reason, but it can also do work. It actually performs tasks. Like, for example, it can write software. It could create a website for you. It could arrange a vacation for you. And so it can actually perform tasks. And that's the reason why we call them agents. They're agentic in their nature. What software companies, the reason why it's so exciting, of course, is because it can write software. What's going to happen are the tools companies, the platform, the ISVs, the SaaS companies, the tools companies, they will use agentic systems to develop their software. But enterprises are not going to go develop software. They're going to use agents to use those tools. And so what's likely going to happen is that agents won't replace the tools, but agents will use tools. That's the reason why we also say agents are tool users. Why write your own? Rewrite the browser when the browser exists and just use it? Why rewrite Excel when Excel exists? Just use it. And so all of these tools that we use today, whether it's Cadence or Synopsys or ServiceNow or SAP, these tools exist for a fundamentally good reason. And AIs, these agentic AIs, will be intelligent software that uses these tools on our behalf and help us be more productive. And so what's likely to happen, and this is very counterintuitive, it's very likely that because we have so many agents in our company now, the tool use will actually go up. And so And you could see it all over the place. The number of C compilers that we use, the number of Python programs that we have, the number of instances are growing very, very fast because the number of agents we have that use these tools are going up. And so I have 42,000 biological employees, and I'm going to have hundreds of thousands of digital employees, and together we're going to use a lot more tools.
But that means that you think that they're not going to disintermediate these companies like a Salesforce or so many of the others along the way. You think they'll still be using those tools coming from those companies that are being sold off right now by the markets?
I think so. I think the market's got it wrong. I think it's very likely that these companies that we're talking about are going to introduce agents that run on their platforms. You know, these agents, of course, they have to be experts in what they do, and nobody's going to understand customer service better than ServiceNow, and they're going to come up with agents that are really fine-tuned and optimized for the type of work that uses the tools that they have. In the end, also, we need the tools to finish their work and put the information back in a way that we can understand. And that we call them system of records. And so each one of these tools have their own system of records. Those system of records exist because we put them there and we use it so that we understand the information that's finally complete. And so those system of records will still be ground truth, and they'll continue to be ground truth. And now the agents will, help. They will use it, and they will populate the system of records. They will use the tools that are available on these platforms. I think a thought experiment that could be helpful is, imagine one of these days when we have robots and these robots are in our homes. It's very unlikely that the robot will come up with a new Cuisinart. The robot will just read the manual for the Cuisinart and just use the Cuisinart. It's more likely that instead of coming up with another way of doing microwaving, that the robot will just use the microwave. These tools exist for a good reason. And so I'm fairly certain future robots will use screwdrivers and wrenches and pliers and things like that. And these tools are essentially in their digital form from the companies that you're talking about.
So they're not going to replace the tools. They're just going to replace us, the humans that use all these tools to begin with. That's an interesting thought experiment.
They're going to help us. And the reason for that is because, as it turns out, that for most of our software engineers, coding is what they do, just as for a CEO, typing is what I do. But the purpose of the typing, the purpose of the coding is solving problems, and solving problems that we haven't even thought of solving. That's called innovation. And so the purpose of the work won't change. And so we're going to need lots and lots of software engineers, but maybe they just don't have to code like they used to code. They'll code in a new way. They'll code in they'll describe to the agents what their intentions are, what kind of ideas they have, and the agents will write the actual software. And so, we'll work at a different level of abstraction. We'll be a lot more productive, hopefully, create a lot of new things and solve a lot of new problems.
So that's Jensen's take on the software companies. If you look at shares of Nvidia, they're up by about 1.25% today. But if you check out shares of Salesforce after its earnings last night, that stock is down by about 4%. So maybe the market not hearing what Jensen's saying, maybe not.
I don't even know if I'm 100% convinced that he's right. Like, whenever you say, hey, will a robot use a microwave or build a new microwave, it's going to use the microwave. I get that, because the robot's going to look around for parts to make a microwave and just realize that they would have to order in a lot of stuff, and it's going to cost a lot to only manufacture one microwave. But coding is not really a thing of price or supply or something like this. We have tons of code supply. What it usually is an information gap that stops people from coding their own tools. And a lot of the sort of hacker type individuals end up making a lot of their own internal tools, because they realize that some of the tools that we use today are actually really easy to be made. But the information gap is what people just say, you know what, I'll just pay $10 a month and just, get access to this tool. For AI agents that can whip up 20,000 lines of code per day, working 24/7, around the clock, just like unbelievable rates of work. I don't know if software is the same as comparing it to a Cuisinart or a microwave or something like this, or a wrench or something like. I think those are different those are different use cases. But we will see. The most expensive part about software engineering is not developing software, but maintaining it. Interesting. Interesting. I don't understand software enough to like I remember having a conversation with the Fiscal AI CEO, and I was talking about with him with like pricing and everything, and I was like, and he was like, yeah, for some reason just software just breaks over time, and like it's just constant maintenance. And I'm like, I don't even understand how that makes sense, but I guess it does. But I'm not in the software coding space. It'll be interesting to see how things end up panning out over time. But that's why I'm not shorting any space. I'm not shorting software or anything like this. It's just what I don't fully understand, I'm not taking part in. A million edge cases. Yeah. Yeah, I guess. Maintaining vibe coded software is a pain. Right now it's a pain, but maybe it gets better over time. Who knows? It breaks over time because a software relies on hundreds of third-party libraries that are constantly needing to grow with your software. That makes sense. Okay, cool. Yeah, so nothing is stagnant. There's constant changes. The route to pull information previously might have changed. It's at a new directory. That's so cool. Man, you know what? Can I just go on a little tangent? It's not even a tangent. I just love, like sometimes I'll turn on the sink. This was like a few nights ago. I turned on the sink and just water was coming out, and I was like looking at my girlfriend. I'm like, do you see, like, aren't you so freaking happy to be alive? Like, this is clean water. This is drinkable water at any temperature we want. For some reason, since I've been born, this exists. I'm like, this world's so amazing. And like, all I get to do is sit here and philosophize about where I think the world's going to go. And even if I get it wrong, I'm still living in a beautiful house. Like, I freaking love life. It blows me away that I get to just sit here and learn about software editing and just stay curious the whole time. And that's what we are as investors. We're just a curious people. Like, it's amazing. I am so grateful. That's why I'm not a pessimist. I'm not this person who's doom scrolling, like looking for the next terrible thing, because I hate the mainstream media news. And there's like an addiction. There's like a parasite in people's brains where they want to hear, like, how many people, is there a new conspiracy? Is the government against us? Are people dying? Is there brutalities in the streets? It's like they're constantly looking for things to complain about. And I'm like, just mind blown of how great things have gotten. I'm like, I live in isn't it crazy? I've gone through this crazy winter and crazy summer, and my house stays at a perfect 22 degrees Celsius constantly with zero fail. Clean drinking water, good clothes, and shit breaks all the time. But like, it's such a small change. White privilege. All right. All right. I don't even think it's Canadian pride. I just think it's like first world pride. In America, you can turn the tap. I mean, unless you're in like Flint, Michigan or something, you turn the tap on, it's drinking water. Yeah. Dude, you have 50% of the world's population living a different life. I get it, brother. Completely get it. What do you want me to do about it? I'm doing my best. I'm happy. There are people that are living way, way nicer lives. Trust fund babies. You know, their first car is a Lamborghini Urus. I'm just happy for what I have. And then there, like, for real, there's people in life that go, hey, Tanner, there are people who have it worse than you. Wake up. It's like, do you even see the role that you're playing in life, trying to take me down from my happiness right now? Like, it's great. Like, you need to live a happier life, my friend. Like, you're only saying that because you're white and in Canada. Just look at yourself. Look at what you're trying to do to my happiness. Look at the role that you just took in this back and forth. You are that guy. You're the guy that I just said is watching the media. You want to hate on me. I'm happy for clean drinking water. I'm not even talking about my successes in shit like this. It's just talking the basic necessities of life that I'm happy that I can go to a nearby grocery store and everything's fresh. Oh gosh. Okay. Let's go ahead and see what else we can find. So, if you guys didn't see already, Nvidia ended up posting that, obviously good earnings. A lot of companies ended up coming in and said, hey, $245 is too low of a price. We need to raise this to $300. Many raises to the now $300 mark. This is 12-month out, right? So that's quite exciting. But Cantor Fitzgerald ended up holding their price target at 300, which a lot of those were only the people who changed their prices, not the people who maintained their prices. And Cantor Fitzgerald, which is CJ Muse, if I'm not mistaken, said, in the words of the great Rodney Dangerfield, Nvidia simply gets no respect. Nvidia has essentially pulled off the triple Lindy this quarter, setting new high watermarks for a beat and raise. Fourth quarter was $3.1 billion above the guided midpoint. First quarter revenue guided $10 billion up quarter over quarter. Let me bring up Nvidia's price as well. I'm bad at my job. Calling for sequential growth through the remainder of the year with revenue upside above the previously noted $500 billion of Blackwell and Rubin orders, and already seeing bookings in calendar year 2027 as agentic AI has reached an inflection point, essentially sold out of their 2026 possible sales. Jensen highlighted the agentic ChatGPT moment has arrived. Isn't that funny? Like, companies can be fully sold out for the year and then somehow the stock ends up going down 5%. It's like, what does sold out mean to you guys? How could it have possibly been better? Elsewhere, supply has been secured to address demand in calendar year 2027, with supply-related commitments up nearly 90% quarter over quarter, and management remains confident in its ability to sustain gross margins in the mid-70s through the year, inclusive of the second half Rubin ramp, which remains on track. I actually missed that. That's crazy, because usually every single new architecture that they push out, the gross margins end up taking a short-term hit. On the downside, operating expenses are tracking a bit higher than expected, completely okay in our view given revenue growth, and bears will continue to point to peaking hyperscale CapEx concerns due to cash flow limitations. But as we enter this new paradigm where NVIDIA's customers are seeing positive returns on token generation driven by new agentic applications, compute equals revenues across companies' broadened customer base, which should support continued build-out from hyperscalers to AI model makers to neoclouds to sovereigns to enterprises and beyond. That was CJ Muse. That's what he ended up saying. Yeah, and like I just said, there was a report saying that they might end up actually borrowing hundreds of billions of dollars because the tokens are already a positive unit economic base for them. Okay. Hood's up. Hood is up. Coming for $80. You guys are correct. I'm going to party like the original time that it was above 100 whenever we pass 100 again. I'm just going to, as if nothing changed. Nebius? Where's Nebius? Nebius 103. I'm actually a little bit excited about that. Give me a discount. I didn't want it running to 110. My position's not fully built out yet. I could always buy more Nebius. Okay. Iran to continue talks next week at technical level. U.S. new business formation is running hot. Census data shows new business applications is holding near the top of the post-2020 range, back above 500K recently versus 200,000 pre-2019. Ooh, little Shopify, little wink to Shopify earnings here. Okay, ladies and gentlemen, that looks to be all from me. I don't have a sleep tip this time. It was not a great sleep day for me. In fact, I actually woke up in the middle of the night pretty sick. Had to, maybe this is TMI. I ran to the bathroom. I made it. Okay. But it wasn't good. I checked my sleep score whenever that was happening because I was not feeling good. And my sleep score was 69. But then I went back to sleep. Ended up getting a 84. But high sleep stress. My sleep stress was, I think, a record high for me. But maybe because I was feeling a little ill. 6%. I'd never seen a 6% before. But yeah. Not pregnant. I didn't throw up. It was like yeah, the other way around. But I told my cheeks to lock in, and they, they clenched up, and I got to the bathroom, and I said, what would I rather clean? Would I rather flush the toilet or mop the floor? I said I'd rather flush the toilet, and my cheeks agreed, so we got there. And I had to run to the other bathroom because the ensuite, like, I don't want, my sweet baby angel, my girlfriend waking up because Tanner's blowing up the bathroom. So I booked it. Is this a stock channel? Says Dookie Pie. Dookie, I thought this would be right up your alley, man. This is your type of content. This is a Tanner. This is my whole life. All right, you guys get all of me. If you guys can't handle me at my worst, you don't deserve me at my best, okay? So take it all in. This is life. Is AI going to tell you about my worries of getting to the bathroom in time? No. This is a human experience. I love you guys so much. I have such a fun time talking on this show. In the next episode, this is the after credits. You already saw like who the director and everything. We have earnings up next. Okay. CoreWeave tonight. We also are going to be going through the numbers of Rocket Lab, SoundHound, Dell, CoreWeave, Duolingo, MP Materials, Block, Copang, Figure, SMR, Intuit, Zscaler, Marathon Digital, Energy Fuels, TerraWolf's going to be another one, Monster. What else do I want to talk about? Rocket Companies, Clover Health, Flutter. Those are the names that we're probably going to cover. Amit's going to cover Grindr, and I'm just kidding. No, we're going to cover all these. So, yeah, But the only difference is that we're going to be actually listening to the CoreWeave call. Okay, I'll be joined by the great and powerful Jose Najarro and Neil, Couch Investor. And so, yeah. Duolingo earnings. Yes, Duolingo is here. It's tonight. Buckle up. Tanner, pump or dump? It was a dump. Yeah. Jose loves air test systems. Is air test systems tonight as well? I didn't think that. When's air? In 40 days. What? Oh, no, they did earnings a while ago, right? January 8th. January 8th. You're going to see Duolingo pump hard. Meanwhile, Nvidia is down. Well, I mean, to be fair, Nvidia has a high price target on it. I'm aware of that. Duolingo has been sold off recently. Now, I think the actual multiple on Duolingo is still higher than, no, PE of 14 times. I thought it was way higher than that, actually. I thought they had like a PE of like 100. Well, I mean, before they ended up, I guess they have come down from $544. Dude, this was a $550 stock. Now it's under 120. The discounts that we've seen. Okay. I think that's time to go. My battery on my camera literally died and it's plugged in. So that's, you know, thank you all so much for watching. Really do appreciate your time, but that's it for me. See you guys at 3:45 p.m. Eastern Standard Time. Bye for now.